Hey everyone, I am so excited today to review L Brands. This is a stock that has come up through the community and everyone is interested to learn more about L Brands. They're wondering, hey Ian, what do you think about L Brands? Stock has plummeted, dividend yield is pretty good. Do you like L Brands as a dividend stock? And so I wanted to take a look at this. For those that don't know, L Brands is the company behind Victoria's Secret and Bath & Body Works, so interesting company for sure. Have some iconic brands there, especially Victoria's Secret, and they have fallen on hard times. And so the stock has fallen from $95 in October 2015 all the way down to $32.77 in July of 2018. That is a drop of 66%. That's a huge drop. And the dividend yield, if I take the dividend per year, which is 2.4, they pay it quarterly, I divide by the share price of $32.77, their starting yield, dividend yield, is a 7.32. Not bad, 7.32% dividend yield. And so today's video, I actually have a surprise. I'm going to go through my bag here. I got a pink bag. This is from Victoria's Secret. I got some stuff in this bag. So you may be wondering, Ian, what do you have in your bag? Well, watch the video and you're going to find out what I have in this bag. So this is going to be an interesting video today about L Brands. So let's get started. All right, everyone. So I think today I'm just going to start with the bag because the items in this bag, it provides the context, the important context for today's video. So let's get started. I just want to see what have I got in this bag. So first and foremost, I got the shades, Thug Life, man. So I got to put those over here. You'll see why I've got Thug Life again in a minute. What else have I got? Dividend check. This channel is about investing for dividends and cash flow. This channel would not be complete. My bag would not be complete without having a dividend check in there. So that's what this is all about. So what else have I got in here? Let's see. All right. Some Crest toothpaste. So I gotta carry around some Crest toothpaste here. I own stock in Procter & Gamble. This is a company that I love, that I'm buying in 2018. I'm gonna put this up here. This is here for a reason. I'm gonna compare and contrast Procter & Gamble to Victoria's Secret to L Brands. We'll do that in a minute, but this is the kind of company that I like to invest in. So what else have I got in the bag? I've got my soap again, Dove soap, Unilever. Contrary to popular opinion, listen to that, there is soap in here. So someone put in the comments that I had no soap in the box, and that is not the case. I really do have the soap. This is Dove soap. I invest in Unilever. I love Unilever, great company. And another example of the kind of company I like to invest in, I'm going to compare this to L Brands and how they differ. I'm going to do that in the video today as well. And by the way, Kraft Heinz, you lost. You did not get Unilever. You did not buy them, and that's why I've got the glasses. You didn't do it. Just a reminder, Kraft Heinz. So what else have I got in here? Let's see. Here it is. So Victoria's Secret Garden Fragrance. Ooh, the love spell. So this is a important product because Kanye West included this in one of his songs in the lyrics, and this was a few years ago. And so this is interesting, actually. I gotta see here. Hold on. I don't know. I don't want to get too much smell here, but let's see how it goes. Okay. Not bad. That is a good fragrance there. So the deal with Love Spell actually is this was real popular. Now I want to thank my wife in advance. She helped me with this video. She helped me prepare for this video because she knows the history. Ooh, that's strong. So she knows the history behind this company, behind the brands, and gave me some insights here that I'm going to share with you all today in addition to all these financial metrics. But Love Spell, you would go downtown, she was saying a few years ago, and a whole town smelled of it because all the women were wearing it. These days, not as much the case anymore. And the point here is trends change. When it comes to fashion, trends change. When it comes to brands that I like to invest in, like Unilever and Procter & Gamble, we got to brush our teeth every day. We got to take a bath or take a shower every day. Do we have to put on Love Spell every day? Not necessarily. Trends change. There might be something better than Love Spell now. And so it's something to keep in mind that I like to buy these brands that are pervasive, that are iconic. Everyone globally needs to consume to live. And quite frankly, if someone comes in and tries to mess with Dove soap, Unilever is going to buy them out. Someone comes in, messes with Crest toothpaste, tries to invent a disruptive toothpaste, Procter & Gamble is going to buy them out. Someone comes in and tries to mess with Victoria's Secret. Victoria's Secret's actually got some issues on their hands. We'll talk about this later, but there are people making competing products. A lot of them are selling them online. A lot of them have lower cost centers because they don't have all these stores. And Victoria's Secret has not, to my knowledge, acquired them yet. So we'll see what happens. But that's kind of the difference here. And so Victoria's Secret, L Brands, by the way, is only $9 billion market cap, whereas these guys are in the hundreds. And so it's a different scale. It's a different type of scale. So something certainly to keep in mind. But this is important. Before we get into the finances, the financials, I want to talk about what this company is and what's changing. Before I even talk about this company, let me just give some other examples. Fashion, it's so tough. Under Armour, darling of Wall Street. A few years ago, they were voted as like the best advertising company in the world. They won Advertiser of the Year. Boy, have times changed. They went from $99 a share in July of 2015 down to $20 a share now in July of 2018. That's a drop of 80%. 80%, Under Armour a few years ago was the darling of Wall Street, and so that's what can happen in fashion. Another example, Abercrombie and Fitch. I looked at their chart, fashion company, been publicly traded for a long time. I looked at them all the way back to like 96. They haven't really gone anywhere since 96, gone nowhere. Pay a dividend, but the stock hasn't gone anywhere. I invest for dividends. I don't care as much about capital appreciation, but I do care about capital appreciation over the long run, because if a company stock is going sideways or going down, it's sometimes indicative of underlying issues. I like to see companies where the stock price is going up, because that shows that the company is doing well, it's well managed, company's been managed properly, and it's signs usually of the dividends going up, so share price is going up, everyone's happy. And so over long periods of time, this industry scares me, fashion industry, because I just see stuff like this, usually over long periods of time, challenges. And L Brands, they're facing challenges now. So let's talk about their challenges. They got Victoria's Secret, they got Pink. We talked about Pink here. This is Pink. So this is just a bag from Pink, but basically you can kind of see the love Pink on there, all that good stuff. A few years ago, my wife was saying, you'd go downtown here where we live, a lot of the younger women would be wearing pink, and they'd have sweatpants, pants, shirts, say Pink on them. You go there now, you just don't see that. What are they wearing instead? They're wearing athleisure clothing. They're wearing Lululemon tights. They're wearing different things. Pink isn't that popular anymore as it once was. And so Victoria's Secret, in addition to selling bras, panties, and fragrances, they also sell Pink clothing items, but the fact of the matter is the brand is facing some challenges on the Pink side of things. But let's even talk about the Victoria's Secret side of things. They sell what has been known in the marketplace of items that are not of necessarily the highest quality, and sometimes, quite frankly, are uncomfortable for women. In fact, the bras have underwire in them, and the underwire, in some cases, reportedly has sometimes come loose or become uncomfortable. And so what's happening in the marketplace right now with women is a lot of them are moving towards different products, and some of the different products that are starting to emerge, these disruptors, are what are called these bralettes. This is a more comfortable bra. This is a bra that women are starting to buy, and I'm sure they sell them here at Victoria's Secret now too. But the fact of the matter is there are other companies out there, disruptors, a lot of them without the retail stores, or some of them just starting to build retail stores, started first online. They're leveraging geo arbitrage. They're leveraging economies of scale by building overseas, import, export, getting low cost base, and competing head to head with companies like Victoria's Secret. And you know what? They're doing pretty well. So that's something to keep in mind. The trends are changing. Bath and Body Works. They also own Bath and Body Works. This is a store that makes items not so dissimilar from this, bubble bath, shampoos, all that kind of thing. Look, Victoria's Secret, there's no denying it. This is an iconic brand, people. I mean, this is an iconic brand. I don't think the brand is going anywhere, but Bath and Body Works, they make bubble bath. Come on, that's just like a gift. You can just buy it as a gift. If you're buy bubble bath shampoos, you don't have to go there. You could go somewhere else. And I understand the reason to go to Victoria's Secret. It's an iconic brand. There's that affinity. But the fact of the matter is with Bath and Body Works, if someone was in a financial pinch, they could go to TJ Maxx, Home Goods, get it probably something very similar on sale for less money. And so that being half their, not half, they have some other brands now as well that I didn't list here, but being a big chunk of their portfolio, that doesn't excite me. Going back to Victoria's Secret, by the way, some other things that have happened, they've gotten rid of their iconic catalog, they discontinued their swim line, and in fact, they had the free panty promotional program. Women would receive in the mailbox this voucher. Hey, come into Victoria's Secret, redeem it for your free panty. The idea is they come in, they get that, they buy a bunch of other stuff. They had to discontinue it because what they found is that women were coming in, they were buying, or they weren't buying anything. They're getting the free panty and they were leaving. And so, challenges, background, interesting stuff just to be aware of. Why is L Brands even called L Brands? Well, they started as The Limited. This is a store, women's clothing store from way back, and used to be in all the malls. My wife said in middle school she used to enjoy going to the stores. Easy to go to stores in the local mall. Then that closed. She had to go further away. Then she had to go further and further away to even go to the Limited. Eventually, these guys sold the Limited. Now, I think it was in 2017, now it's gone into bankruptcy. Probably good they sold it, but boy, isn't that a horrible turn of events. Just goes to show things can happen in fashion, and the company is called L Brands after the Limited. They used to be called the Limited Brands, now they're called L Brands. Their flagship, not only did they sell it, but the thing went bankrupt. That's not good. What else? Express, they used to own that, they sold the majority of that company too. Will it follow the trajectory of the Limited? I don't know, but this is fashion, folks. This is what you're down to basically at this company now is Victoria's Secret, which I think is a pretty good brand, and Bath and Body Works, which I'm not so excited about. And even at Victoria's Secret, like I was saying with Pink, with some of their products, external competition, there's forces at play there. So now that we've looked at the macro, the big picture, let's go down and look at some of the details. What's going on financially with this company? Well, we talked about this, share price down 66%. PE ratio, they have an attractive PE ratio right now. If you take, it's actually misleading when one looks on Yahoo Finance because earnings are going down over time. Yahoo Finance has a PE based on trailing 12 months, which has a PE in the 10s. If you looked at the forward 12 months based on consensus analyst estimates, the real PE is 11.79. It's 32.77 divided by 2.78, which is what they project in the next 12 months. PE is at 11.79. Is that a bargain basement PE for a company that's facing challenges of this magnitude that you're going to see in a minute? Not necessarily. So you'll see in a minute. But I think like a PE of 7 or 8 would be more fitting. If I were a turnaround investor, maybe I'd be interested at a 7 or 8, but I'm just not a turnaround investor. I like to buy and hold forever. And certainly, as you can already get a flavor of, this is not a forever kind of stock, in my opinion, because fashion is just so fickle. Things change way too quickly in the world of fashion. So anyways, let's go on. Oh, by the way, the trailing 12-month EPS was a 3.28. So trailing 12 months, these guys have earned 3.28 per share. Fiscal 19 projected EPS is a 2.78. It's going in the wrong direction. That's not good, but we'll get more into that in a minute. Dividend, $2.40 per share, paid quarterly. Starting yield, 7.32. Not a bad starting yield. It is attracting a lot of attention from dividend investors, value investors. The PE, or the dividend, not really the kind of company that raises it each year. They kind of raise it every few years. And so if I were investing in this company, which I am not, I would not expect the dividend to go up from here. This is the kind of thing where I would pray that the dividend did not go down. It's the kind of thing where I lock it in. I'm like, I pray that this stays at a 7.32 and doesn't get cut. I don't think it's going up from here based on their history of how they raise the dividends pretty haphazardly. But also, because their payout ratio, I take the dividends, 2.40, divide by the earnings per share, 2.78. Payout ratio, folks, is an 86%. That's a high payout ratio. I like payout ratios in 60% range or lower. When it comes to a utility company, I'll take a payout ratio this high or higher, but utility company is really different. This isn't a utility company. This is a fashion company, a retail company. 86% payout ratio is too high. Challenges they're facing, they may need to cut the dividend with a payout ratio that high, and that's why going into this thing, if I were to go into it, I'd just be praying that they hold that dividend steady and that they turn this thing around so they don't have to cut it. Let's go on. Revenue. So I actually have a bunch of metrics here. I broke them down by fiscal years. Company's fiscal year ends at the end of January, early February, and so fiscal 2018 ended early February of 2018 this year. Fiscal 17 ended at the end of January 17. So fiscal 18, 17, 16, 15, and 14. Look at this revenue. Revenue is going up. Goes from 10,773, 11,454, 12,154, 12,574, 12,632. You start looking at something like that and you're like, wow, that's not bad. Revenue is going up. Hey, are they really facing troubles? I think so. I think they're pushing this revenue. I think they're artificially pushing it up, and it just scares me because all the other metrics, the profit metrics that matter, are shrinking. You cannot pay me my dividend check out of revenue. You pay it out of profits, earnings, net earnings. So your revenue is going up. I don't really care if everything else is shrinking that's lower down on the income statement. And so we'll get more into this in a minute. Maybe this is a strategy they have. Maybe they're just growing revenue because they're going for land grab. They're going for market share and they're scared of the competitors. It's trying to box everyone out. Maybe that's their strategy. Maybe they think if they manage their revenue and they manage their earnings to grow earnings, that they're just going to lose market share and the company is going to shrink and shrink and shrink. And eventually it's going to affect earnings because they're going to shrink so much. Maybe that's what they're thinking, but at the same time, it just scares me. So let's move on to gross profit. Now, gross profit is revenue minus cost of goods sold. I'm not going to go through all the numbers here, but it's trending down. Fiscal 16 was at 5204, 17 5125, 18 4959. Gross profit last two fiscal years is trending down. It goes from a peak here down, down. Why is gross profit shrinking? It means the cost of goods sold is going up. It means it's getting more expensive to make these items. Now, it could be because it's just the cost of raw materials is going up. I'm seeing that at some of the companies I own, and I'm hearing that, especially in the food space. Food space, I'm hearing that a lot on earnings reports. Don't know if that's affecting them or not. Could also be, though, that they're just upping their quality, and they have to up their quality because they're competing with other companies that might have better quality because they don't have the overhead of retail, so they're going all in on quality, and they're facing head-to-head competition, so it may be that they're just trying to compete. I don't know. Those are some hypotheses I have. Moving on to operating income. I love it. I love operating income because it doesn't take taxes into account, but it takes everything else. Operating income is down. And not only is it trending down 16 to 17 to 18, the operating income is the lowest it's been in the last 5 years. It's 1,728 versus 1,743 in 2014. It's down. Lowest point in 5 years. That scares me. Why are they growing the revenue when the operating profit is just shrinking, shrinking, shrinking? Maybe they're having to invest more in sales, marketing, general and administrative, other items. We know on the gross profit side they're having to have a higher cost of goods sold. And so this leads me to believe that this business is becoming less efficient. Margins are shrinking. Money is profit. It's going down. Less dividend checks for someone like me over the long haul. I don't like seeing it. I feel like they're propping up this revenue at the expense of margin. EPS, or actually I don't have EPS on here, but net income, it's also down. It's going down from 16 to 17 to 18. 2018 net income, though, I don't look at it quite as closely as the other metrics just because tax reform threw a lot of stuff off in the last year. And so that's why operating income is more important to me. But needless to say, it kind of echoes what I'm seeing there. On a positive note, the long-term debt, it's not too bad. It's 5.7 billion. It's been pretty flat. It went up. It did a function step of 1 billion when you look at fiscal 2015 versus 16. So there's something going on there. Looks though last 3 years like they're trying to keep the debt at the same level, but still it's not a small amount of debt by any means. Got a lot of long-term debt there, and having the burden of that debt while you're facing shrinking profits and margins and earnings, it's not good. Moving on, number of stores. Over this period it's growing. Leads me back to my original hypothesis. Maybe they're just going for land grab. They're like, look, we're facing some challenges, but you know what? We're just going to open more stores. Let's try to push through it. Let's try to just take the market. I don't know if that's what they're doing, but it seems like it because they keep opening more stores. Now they're closing stores, but they're opening more stores than they're closing, so the stores keep growing. Generally, for a retail analysis, I like to see more stores. But I only like to see it if all the other metrics are good too, which they're not here. And so it's kind of a red flag that they may be almost in denial as to what's going on here. They don't get the grasp at what's really the magnitude of what's happening. I don't know. Moving on. Okay, that's it for what I pulled all this, by the way, from the fiscal 2018 10K, the annual report. Next, what I did is I looked at the Q1 earnings report for fiscal 2019. It really continued similar trends. The revenue up. Revenue is 2.6 billion versus 2.43. They're notching that revenue up. It's interesting, but operating income, this terrifies me. Operating income is 154.8 million. Guess what it was a year ago, same quarter? 209. It went from 209 to 154. Oh my goodness, that's not good. That's a huge drop in operating income. Here's where I'm at, synthesizing all of this data, all of this background. This is not the stock for me. There are different types of investors. This might be a stock for a different type of investor. Let's say hypothetically I like to buy turnarounds. I like to buy them, hold them 5-10 years, and then sell them at a higher price. Wouldn't be doing it at a PE of 11.79, but if this thing got down to a 7, maybe I'd be buying it as a turnaround, hoping to get a deep value and then sell it. It's not me. I buy and hold companies like this forever, generationally, never want to sell it. Don't think they're going anywhere. Companies like this, they don't just make Dove soap. They make Axe body spray. They make Ben & Jerry's ice cream. They make Magnum chocolate bars. They make all kinds of stuff. The list goes on. Lipton iced teas. It just goes on and on and on. And companies like this, they don't just make the Crest toothpaste. They make the Gillette razors. They make the Swiffer sweepers. They make the Swiffer dusters. They make the Bounty paper towels. List goes on and on and on. And these two companies are global companies. By contrast, Victoria's Secret, most of their business, and Bath & Body Works, most of the business is in the United States. And so one may say, oh, that's an opportunity for these guys. They could expand internationally. But we all know international expansion, it's not so easy. They probably would have done it already if it were really easy. And so the fact that these guys already figured out international expansion, and these guys are based internationally, go Netherlands, they got that figured out. And so for me, I like to buy companies that make the products that we all need every day, have a diverse group of products, and are global. When a company is so dependent on these two brands, Victoria's Secret, Bath & Body Works, we've got a real fickle market in fashion. Things are just changing. It's not the kind of long-term industry I like to put myself behind. And I'm telling you, before I even did the analysis, a lot of time on companies like this, I just don't do the analysis because I'm like, look, it's not for me, probably for someone else. I wish everyone who buys it a ton of luck and a ton of prosperity, but it's just not for me because I can't see myself holding it forever the way I can with companies like this. And so that's where I'm at with L Brands. Now, again, this could be a great opportunity. It could be, especially in the short run, when someone's looking next 5 or 10 years, I hope they turn it around. They got an iconic brand. Maybe I'm completely wrong about Bath & Body Works. Maybe it is all that. And look, they got a few things going for them. I think they got the brand. They got a growing stream of revenue. And well, maybe that's what they got going for them. And a dividend. They got a nice starting yield. And even if it doesn't grow, boy, locking in a 7+% dividend, not bad. That's a big dividend. That's good dividend. That's good cash flow. Nothing wrong with that. So they got a few things going for them, but they got enough going against them, and just they're in the wrong industry for me. It's just not an industry that I participate in. And I do own retail, by the way. I own a stock in McDonald's and Starbucks. They're more restaurants, but I classify that as retail as well because they have storefronts. And I play retail more on the side of what do people need every day? What do people need that's just so widespread globally that is not going away? And this is different. This is more consumer discretionary. So whereas something like this, it kind of falls into consumer non-cyclical, something like this is more discretionary. You don't need to buy this every day. You don't need to go to Victoria's Secret every day. And so it's more discretionary. And so something like that can become more cyclical too with economic cycles, whereas a non-cyclical, they kind of do well in all economies because people need it. That's my analysis of L Brands. Look, I am not trying to put down anyone. I am so thankful. I'm so grateful for this community. I love this community. And these are great questions. There is no one right answer. I am very opinionated. I am very stuck in my ways, very stubborn. You're not going to change my mind, but that's okay. I'm just sharing my journey here. There are so many different ways to make money investing, and I know it. I know there are going to be people that win, that make money on this, but I'm just trying to share my journey here and why it's not for me, to give a different perspective than a lot of other folks out there. And so that's my take on this one. Now, before I leave today, I want to thank you. I want to thank you for this question. I want to thank the community. I am so blessed. And I want to encourage you, if you enjoyed the video, please comment, please like, subscribe. We have a thriving community here. I want to thank my wife as well. Thank you so much for the background knowledge on L Brands, on these brands in this video. I really appreciate it. I think it was great knowledge to share with everyone out there. And so before I leave today, just full disclosure, I own some of the stocks I mentioned today. I don't own this one, but I own Procter & Gamble, ticker symbol PG, Unilever, ticker symbol UL. I own McDonald's, ticker symbol MCD, and I own Starbucks, ticker symbol SBUX. I own those stocks in my personal stock portfolio. Also, before I leave today, a friendly disclaimer: I am not a licensed investment advisor. Today's video is not investment advice. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market, please consult a licensed financial professional first. Thanks again, everyone. We're going strong here in our dividend investing community. Let's continue to support each other in our journeys for passive income, financial independence. And I will see you all in the next dividend investing video.